Hello, good morning. You're watching Buy Now, Sell Now on ET Now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good morning to you. And not much of a Monday blue, at least coming in on the D Street.
Absolutely, Vinny. A very good morning to you as well. And it looks like a very good start to a brand new week for the benchmark indices. Remember, we are just a little over 200 points away from that record high levels for the Nifty. Remember, the last time the record high level for the Nifty was 18,888. If you look at the way how the market construct looking right now, like when you said, no Monday blues for the D Street, we are seeing a good uptick coming on the Nifty of approximately 90 points. You have a Nifty Bank that is seeing a tad bit outperformance when you compare it to the benchmark indices. Broader markets as well for now in the positive territory. No doubt they're off the day's highest point right now. Talking about the list of gainers, you have Mahindra, Axis Bank, Adani Enterprises, Tata Motors, Maruti Suzuki, all of them seeing good strength. And talking about the auto pack in particular, you have the Nifty Auto Index that hit a record high level as well in today's trading session. On the flip side is Divi's Laboratories, Tech Mahindra and BPCL that are on a weak footing as of now. Let's talk about the sectoral indices, and except the realty and FMCG pack, all the other sectors are in the positive territory. So that's the way how the markets are looking like today. Vinny, definitely no Monday blues.
Absolutely, definitely no Monday blues. But Cheryl, today we are going to be discussing an exciting topic on the Buy Now, Sell Now lens, and that's going to be the textile space overall. Whether you look at home textiles or cotton prices, how is that impacting the textile players? And are we actually starting to see a recovery coming in the US markets, UK markets? And what's China Plus One doing? First, to get more details on that, we are joined by Vamakshi to tell us what's happening in this textile space. Vamakshi?
Well, yes, Sunil, a lot is happening in the textile space. Let's first start off by talking about the cotton prices, which have actually taken a knock. Now, after stabilizing at around 60 to 61,000 levels per candy for some time, cotton prices have in fact declined further in the last few weeks. In fact, cotton prices dropped to as much as 56,000 to almost 57,000 per candy. But however, this is still higher than what the pre-COVID levels were at. The farmers who were holding it expecting prices to rise going ahead have in fact started selling their produce, and in fact the daily arrival of cotton in the markets has risen fivefold. So an increase in the supply of cotton is causing the cotton prices to dip further, which is a positive for textile companies as it happens to be a very important raw material. Apart from that, when you look at the exports, when you talk about ready-made garments exports specifically, they did see a dip of almost 17% month-on-month basis in April, but from May we're seeing a smart uptick come in. Global majors such as Walmart, H&M, Tommy Hilfiger as well as Targets are also reportedly placing orders. In fact, Walmart has sanctioned sourcing of almost $10 billion worth of goods from India alone. Now, apart from that, when you look at the inflation that is there in the US markets, the fuel prices that are there, those are falling, which in turn means that the customer sentiment is improving. Apart from that, last year we did sign FTAs with UAE and Australia. Companies are seeing benefits trickle in from that, and a few FTAs are expected to come in from the UK as well as the EU region, which would put Indian exporters on an equal footing with peers. In fact, Bangladesh and Vietnam, if we look at them, already have privileged access to the EU market. Now, today itself, we had a discussion on the textile space, wherein the RK Vij, the president of the Textile Association, said that the outlook for exports is now seen improving. They're expecting the situation to in fact improve from September onwards due to the government push with schemes such as PLI as well as the PM Mitra Parks taking effect. And in fact, a major challenge would be the uncompetitive raw material cost. Apart from that, Gokuldas Exports, the management also highlighted that the long-term narrative for the entire textile space is quite positive. With China Plus One, the sentiment is seen very strong, especially in the US markets. Vietnamese costs are rising, and companies are in fact looking for other alternatives. India, Bangladesh and Indonesia are some of the alternatives that they're looking at. So largely that is the textile space, and that is on account of all those factors, textiles in focus.
So for that, Vamakshi, for putting into context what's exactly happening in the textile space and what you should look forward to going ahead. But let's bring on board our guest for today to understand more as to what should you do when it comes to investment in the textile space. We have Kunal Bothra as well as Ashish Kapoor joining us on the show today. A very good morning to you, Ashish, as well as Kunal. Thank you so much for joining us on Buy Now, Sell Now. And Kunal, I'll come first to you. Textile space, a pretty huge space actually. But among that space, which is your top pick?
Well, exactly. I think, good morning, Cheryl. There are a lot many stocks in the textile space which are looking attractive, but the One which looks quite strong on the charts in the recent one is Arvind. The stock I think has sprung up from I think 85.90, which was the base for Arvind 2-3 months back, to now 120 plus levels. I think it looks very attractive. The last 3-4 months of price pattern, consistency of volumes have been exceptionally strong for the stock. So that's a stock which I would pick up from the space, and expecting the stock to get back towards its previous major high breakouts, possibly above the 150 mark as well over the near term.
Okay, Arvind is the pick coming in from Kunal, but Ashish, good morning. And what would you look at in the textile space? Would it be something from the spinning mill side, ready-made garment space, home textile space? Which company is fundamentally looking strong, given that now cotton prices are also seeing a drop coming in?
Yeah, I think the outlook generally remains positive because firstly, China plus one factor is helping a lot of exporters. Secondly, I think a lot of the competing countries like Pakistan are in a kind of an economic economic stress. So that is kind of giving some more push. Also, worldwide demand for cotton textiles and cotton accessories is going up. That is also a benefit, and the government policy also is they're doing their best to encourage textile exports. So all these things are the tailwinds which are helping the sector. When it comes to picking, we like the bigger players because I think they have more stability in their demand and production outlook. So my top pick in this sector is Vardhaman. I think it still has a very good, is available at a very good valuation and has very good, interesting growth prospects going forward. Apart from that, the other stock which I like is and I can recommend is Gokul Das Exports. I think these two should be your top picks when it comes to this sector.
All right, so those are topics coming in from Ashish in the textile space, Vardhaman Textile as well as Gokul Das Exports, and Kunal did flag off Arvind. But on that note, we'll actually slip into a break on this edition of Buy Now Sell Now. When we come back, we will start taking your queries, so viewers don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, and let's start taking your queries. We have our experts with us today. We have Kunal Bothra as well as Ashish Kapoor joining us on the show. And let me take the first query that I have. Is coming from Shri. He's writing to us from Cochin. He's currently holding Deepa Fertilizers, about 25 shares at a price of 887 rupees per share, as well as Polyplex 30 shares at a price of 1,622. He's saying that he's not seeing great momentum in the stock despite you seeing a good uptick coming on the benchmark indices. Kunal, what should he do now with both of them? Should he look to average or look to exit altogether?
Yeah, I think Deepak Fertilizers, you can look to just hold on to the stock. I think the fertilizer pack is just making a comeback. Most of the other names like RCF, FACT, etc. are showing signs of a turnaround. So I think it could be a matter of time that Deepak Fertilizer can also get into a recovery phase. But I would probably expect this to be just a mild recovery for Deepak Fertilizer and not a major turnaround as such on the charts. So would be the case with Polyplex. I think from 1200 or sub 1200 as a base, the stock rallied up to 1600 levels. Now from 1600, it's corrected back towards 1330, 1350 mark. So I think it's come back towards a mean support for itself. So you can continue to hold on, but I would not suggest to add or accumulate both the stocks at current levels.
Okay. Ashish Veni from Hyderabad has Amara Raja 100 shares at 753 rupees, while Granules 100 shares at 341 rupees. They're making a loss over here. So what should they do? Continue to hold, sell, or maybe look to average out?
Amaraja, certainly they can average out. I think the stock is going to do very well again. I think I am been recommending this stock, and I think the very clear fundamental improvement, and my target itself is about 800 rupees in a year's time. So certainly Amaraja, you can average more at this price, and I think you should recover your original cost plus make some profit on it also. Regarding Granules, I think very slow moving. I think if you have a lot of patience, you can continue to hold on. I wouldn't suggest buying more now at this rate, but if you can hold on, yes, eventually you should be able to recover here also, but it will be a slow mover. But Amaraja, I'm expecting a very good movement in the very near future also. So certainly look at averaging more at the current price.
This was from Ghosh Dada writing to us from Delhi, and he wants your view on Paras Defense as well as Quick Heal at current market price. He's intending to invest in these counters today. Do you think it makes sense?
Well, Paras Defense, yes, you can look to go ahead and buy. I think the stock is making some sort of a breakout, swing chart breakout about the 540 mark. I think 545 was the previous high for Bharat for Paras Defense. I think that's a stock which you can look to buy. I'm not sure Quick Heal, would probably give into any kind of a major turnaround because the stock had disappointed in the last, I think 1.5 to 2 years from 300, which was the high in 2021 end. The stock had corrected half to almost 150 and it's still struggling at the 150 mark. So I would suggest an avoid on Quick Heal, but I think Paras Defense could be a better bet.
Okay, that is Paras Defense. Just let's take a quick look at what the markets are doing also as of now. Nifty 18,600 comfortably holding above those levels as well. Sensex 2 62,900 is where it is at currently. Mid cap, small cap space, that is something that is a bit of an underperformance there, what we're seeing coming in versus the benchmark indices. Let's keep an eye out on that as well. Sectoral wise and sector wise, what we're seeing coming in, FMCG, yes, a bit of a decline coming in on the FMCG front as well as the Nifty Realty as well. While among the top gainers, we have Nifty Media as well as Auto gaining more than 1%. But we do have the management of Westlife Foodworld, Amit Jatia, chairperson, joining in with us as the company listed today on the NSE. Firstly, very good morning, Mr. Jatia, and thank you so much for joining in with us. I want to understand, what was the reason behind you deciding to list on the NSE now? What is the strategy behind this?
I think, as the brand and the business is growing, our investor base is also growing quite substantially. Today, I'm proud to say we have 35,000 investors already, and we are hoping that we will soon have lakhs of people coming on board. And therefore, we wanted Westlife to be available to our investors on all platforms. And therefore, it's very prestigious to be listed on the National Stock Exchange as well. So we thought it's a good additional step from, of course, the prestigious BSE. That is the main thought process behind this.
Good morning, Mr. Jatia. This is Cheryl also joining in the conversation. And the company, if you look at the performance, they've been able to perform much better than peers in the quarter gone by. Do you expect your outperformance compared to the peers to continue going ahead in this fiscal year as well?
Well, our whole thought process is that, McDonald's and Westlife has always operated from a platform and a strategic intent, rather than being tactical based on the volatility of the environment. And I think this has held us in good stead right from 2013, where we believe we have been able to deliver differentiated performance. And therefore, I do hope that given this continuation of our strategic foundation, we hope to continue to deliver differentiated results for our investors over the next 3 to 4 years.
Also, then what about your expansion plans in the southern India as well as tier 2 cities, especially in southern India with your chicken offerings as well?
So essentially, we've been a very focused growth company. Right or wrong is a separate subject, but that's how we've been. And as we continue to expand our reach into the country from about 45 to 50 cities over the next 4 to 5 years, we hope to increase that by at least 50%. So there is a push towards reaching more tier 2 and tier 3 cities as well. Not that we don't operate in these cities, but the intent is to push. So if earlier we were 70% in what we call our top key 6 cities, the plan now is to be at about 60% of growth in the key cities and take the smaller city growth from 30% to 40%. So yes, you will see an increased penetration in smaller cities, and also in South, with the chicken platform and the current base of 150 stores, we feel the opportunity has really grown quite rapidly, and therefore we will continue to focus very hard to grow the base in South as well. So when we double the restaurant base from the 350 to say 550 to 600 to 700 over the next 5-10 years, you will see us present in pretty much every small city or every city rather in West and South, and you will see us increase penetration in both West and South as well.
Right. If you could talk about the demand trends that you are actually seeing so far in FY24, are you seeing some sort of increase in demand for pizza, I beg your pardon, burgers when you compare it to pizza? Do you see that trend continue?
All I can say is talking about last quarter, which ended in March. What we are seeing is that we track the informal eating out market, and the informal eating out market is kind of flat for now. The important thing is it's not degrowing, yeah, but it's been not growing as well, at least in the last quarter. But what we are seeing is that at that time, value starts becoming very important to the consumer, and therefore visits, the consumer visits within eating out so many different options. But we find that visits to McDonald's have actually gone up because we provide value. So there is a bit of a shift happening within the eating out industry, and it's typical. It has been seen through various recessions over the last 25 years that when things get slightly tougher for the consumer, then they tend to move towards QSR, and therefore we become beneficiaries of that.
Okay, and lastly, if you could help us, how the economics of food delivery on ONDC versus the aggregators work, and is it more beneficial for you in terms of a restaurant to go on the ONDC platform?
So the most important thing is that Westlife will be wherever platforms are emerging. So there's no question that we will not take leadership position as needed, where needed. ONDC is still emerging. The backbone of delivery rests with the company, and thankfully Westlife has the backbone. So therefore, as ONDC keeps taking shape, we will definitely be a part of that as well.
All right, Mr. Jata, we leave it there. Thanks so much for joining us on ET Now, on listing on the NSE, as well as to talk about your company and the way forward for Westlife Foodworld. And that was Amit Jatia joining us, who is the chairperson of Westlife Foodworld. But let's move on and let's continue taking all of his stock-related queries. And this one is for you, Kunal. This one has come from Denny. He's writing to us from UK. He's holding TCS call option 3280 at 68, 2 lots of that. And Cipla call option of 950 at 32, 2 lots as well, June expiry. He wants to know what should he do with both of them.
I think you should hold on to both of the stocks. Pharma I'm bullish on, not specifically on Cipla, but I think on the entire large cap pharma names, specifically Sun Pharma, etc. So I would probably expect Cipla to also get into some sort of a rally. TCS on the other hand, the stock I think is a possible candidate of a strong short covering, because I think the likes of TCS, Infosys, HCLTech, etc. These stocks have been beaten down. The chart patterns, the indicators have started to reverse for these charts, and I would believe that the price could also replicate the same over the very near term. So I think you can continue to hold on to both of these names.
Okay, Ashish, this next query is coming in from a long-term investor with a vision of 3 years, that is Bisakha from Kolkata. They are holding 100 shares of Bhansali Engineer Polymers at 113 rupees and Gujarat Pipava at around 92 rupees. Should they continue to hold this or book up profits, or what should they be doing now?
Well, Gujarat Pipavav, I can say they continue to hold on. I think the prospects are quite bright, and I think eventually you will make money here. Bhansali Engineering, I haven't tracked it, so I would not like to comment on that.
Right, this one is coming from Renuka Thomas from Trivandrum, and holding sale at a price of 96 rupees per share, as well as V-Guard at a price of around 270 rupees per share. Kunal, what's your take on both of these counters? Hold or look to exit?
Well, I think it depends on your time frame. If you're a short-term investor, I think it doesn't make sense to hold on to both of these names, because the chart patterns are still very sluggish. These stocks are going through a consolidation, both SAIL as well as V-Guard, and I don't sense an immediate breakout into these charts. So I think it all depends on your time frame. So if it's restricted towards maybe 1 week to 3 weeks, 4 weeks, then I think you should look to switch on to other names. Some of the stocks which I would probably suggest at current levels, something like from the large cap pharma name, Sun Pharma is something where I'm extremely bullish on. I would believe that the stock is heading towards a classical breakout, and PFC is the other stock which I believe could also possibly try and give some decent breakout on the upside. So I think trading at 190 approximately, would look out for 220 as a near term target.
Okay, next query is from Dhananjay, and Ashish, he wants to know whether it's a good time to start accumulating Aavas Financiers for the long term. 3 to 5 years is the time period they're looking at.
Yeah, I think I quite agree with the choice. I think over a period of time, this company should deliver good value. I think it's in a very good stage right now. So good time to accumulate this stock for the long term periods.
Okay, Kunal, this one is from Anupam Malik from Kolkata. holding about 100 shares of Hinduja Global at a price of around 1,150. What's the prospect for the next 6 months?
Well, again, a very high beta stock. I think it was beaten down significantly. I think somewhere in 2021-22 from 1800, the stock had fallen very sharply to 1000 levels. It's still trying to get into a recuperative phase. The stock has not yet given signs of any kind of a major breakout. In fact, there have been periodical rallies for Hinduja Global, but those rallies have been met with extreme high volume selling, where the stock just very quickly goes into a reversal. So I would suggest not to be too much gung-ho about the stock or the prospect over the near term. So I would suggest an avoid or an exit.
Okay. Ashish Satyaveni from Vishakhapatnam, who is a long-term investor as well, is holding Tech Mahindra 300 shares at 1,710 rupees and also Bata at 1,833 rupees. Currently making a loss there. So should they continue to hold or maybe look to average out? And if average out, at what price if they're a long-term investor?
Well, I think certainly you can should hold on, and both the stocks, I think you can average out more. Within the IT space, Tech Mahindra, not my best, according to me, not the best option. I would rather go with a TCS or an Infosys within large cap IT space. But having bought into Tech Mahindra already, no harm in trying to average more. And in Tech Mahindra, I would say you could look at declines, because I think the IT space would continue to face some headwinds in the very near future. So you could look to maybe average out in a staggered way on the way down. Bata, just go ahead and I think average out. I think Bata should, I think, turn around its fortunes very fast and do very well from here. The stock has corrected a fair bit and has consolidated at the lower levels. So Bata, I would expect a recovery much faster. So I think go ahead and average at the current levels. Tech Mahindra, try and use declines to average. But both of them should be held on. I think you will make money eventually in them.
All right, then on that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking all of our stock-related queries. So viewers, don't go anywhere.
Welcome back, and you're watching Buy Now, Sell Now on ET. Now let's keep it going with all your stock related queries. If you haven't sent us your queries, you can send it to us on the WhatsApp number flashing on the screen. Let's move on, and Kunal Harika wants to know that is it a good time to actually purchase Biocon as well as Explio Solutions at the current price? What is the outlook for this one? Is it the safe time to enter?
But Biocon, you can look to start entering at current levels, but I would suggest that you have a staggered approach over here, because the stock has this odd tendency of going into sharp corrections every now and then. There's news flow which is attached to the stock price, or some sort of a event which happens which leads into a sudden drop of 15-20 rupees for Biocon. So you can start at current levels of 240 to 42 and then look to add maybe another 20 points on the downside as a good strategy for Biocon. Explio Solutions, on the other hand, I think at 1540 levels again looks attractive. It's on the verge of a breakout at the 1540 mark, a flag pattern breakout, more visible on the weekly as well as on the monthly chart. So you can consider buying the stock at current levels.
All right, this one is coming in from Puneet. One more coming your way, Kunal, because a lot of F&O queries that we've been getting. This one is from Puneet from Delhi. Hero Motorcall 2900 call option June series at 68. He wants to know what sort of a target should he keep in mind for this one.
So I think I'm not sure of the current market price of the call option, but I think Hero MotoCorp has come back towards an overbought territory, which means for the next couple of days, the stock would probably get into a mild correction like what we are seeing today. So over the last couple of days, what was happening is Hero MotoCorp led the charge on the front, and then the other stocks like M&M, Ashok Leyland, etc. These stocks struggled. Now today it's a different day for the stock where Hero MotoCorp is struggling and Ashok Leyland, M&M, etc. are performing very well. So maybe it's a phase off for the next couple of days. But if you can hold on to it for say another week or 10 days, then I believe a possibility of Hero MotoCorp hitting 3000 levels for the June expiry could be pretty much high.
Ashish, Rima from Pune has 50 shares of CDSL at an average price of 1,100 rupees per share. Currently, they're facing a loss here. What should they do? Should they look to average out at the current price or continue to just sit with it?
I think you can average out also. You can buy more at the current price, because I think financialization is a great theme going forward, and CDSL perhaps covers it better than many other or most other stocks in this space. I think clear growth trajectory going forward. I think depository services are going to continue to grow and continue to be in demand, and CDSL has a very good hold in this market along with the NSDL, the two big depositories. So I think there's no way that you will not make money if you hold on to this for a period of time. So you can easily buy more at the current rates.
Kunal, this one's coming from Chandrasekharan, writing to us from Chennai, and he's holding Loris Labs about 200 shares at a price of around 512 rupees per share. He's saying that he can hold this counter for the next 1 year. He wants to know whether he should average at these levels or wait for further correction, and he wants a 1-year target. But if you look at the stock price right now, it's way below his buy price, 512 versus buy price.
Yeah, way below the buy price. In fact, over the last many months, I think particularly in 2022, I had advised to avoid Loris Lab as well as sell. Now I think over the last 1 or 2 months, the trends have started to change for Loris Lab, where there has been very good pickup of volumes. The prices have stabilized. 300 is a major base or a support for Loris Labs. So I think keeping that as a benchmark, I would probably expect that you can start averaging out at current levels. Again, average out in 2 phases, where you can start averaging first part at current levels and the second part maybe closer to 325, 328 if the stock happens to correct to those levels, and continue to hold on. My belief is that for the next 12 months, if the pharma rally in the recovery is something where, if it moves on to my expected lines, then I would believe Loris Labs can also make a comeback towards 450 mark at least.
Okay, Ashish, the next query is on Astral. The viewer has 25 shares at 1,750 rupees. What should they do? Look to sell it or wait?
I think continue to hold on. I think the company is doing well. Will continue to deliver more profits going forward.
Okay, Kunal, one more coming your way. Short-term investor, that's Ravi Tega, writing to us from Hyderabad. He has 125 JSPL at an average price of 520 rupees per share. What's the target that he should look for?
See, from a short-term play, you can look out for 550, 545 as a target. I think there was a gap which was created for JSPL on, a couple of weeks back. I'm not sure of the exact day, but I think 550, 540 was the gap for JSPL. So even if there is a mild recovery or a pullback rally, the pullback could probably, end towards the 540, 550 mark. So that could be a near-term target which you can keep.
Ashish, Pradeep from Kolkata, who's a long-term investor, has purchased 30 shares of BCL at 388 and 20 shares of UPL at 678. Should they continue to hold this or book profits?
BCL, I don't know exactly, but UPL, I think it's been a long time. It's been a kind of a range. But what I understand is that the company is certainly going in for expansion as well as possible takeovers in the near future. So I think this UPL you should certainly hold on. In fact, look at averaging more if you have money available. And this one I'm positive on. I think within 1.5 years it should do much better in terms of pricing from where it is right now.
Okay, this one is coming in from Satya. Kunal, this one is for you in particular. He's asking a suggestion on Heikel. His average price is 365. HDFC Life is priced at 565 rupees per share for the next 3 to 12 months. What's your view on these counters? Also, he's added another query. I'm not sure whether he's asking whether you would suggest exiting these counters, and he's saying if should he look to sell and instead buy Panisha Biotech.
Okay, so 3 queries. I would probably look out for Heikel and the second stock which you mentioned.
HDFC Life.
HDFC Life. I think both these stocks are good enough as a chart. Now I would not suggest to average out, accumulate or add at current levels, because these stocks are going through their own sweet phase of gradual uptrend. So in a process of gradual uptrend, especially when a stock is perched at a fresh swing high, you would probably not want to accumulate the stocks, because then there's too much of waiting time as well as patience which gets tested for these names. So rather than shifting towards Panisha Biotech, which is a stock which is still struggling, I think it's at a multi-week low, it makes sense to hold on to Heikel as well as HDFC Life, at least at current levels. In case if these stocks dip, say by a margin of 7% to 8%, that's where I think you can look to maybe accumulate or add further.
Okay. Ashish, we have Suman Agarwal who wants to know whether it's a good time to look at Ujjivan Small Finance Bank as well as Jai Bharat Maruti. They want to allocate around 20,000 rupees in both these stocks as of now.
Well, I think the Jai Bharat Maruti, certainly, I think auto, we are seeing numbers being pick up in almost all the OMCs. So that could be a kind of a good stock to look for. Regarding Ujjivan Small Finance, see, Ujjivan as a group, I mean, of course, there's the latest development which seems to be positive, but Ujjivan as a group, has disappointed since its listing, the main company way back in, I think, 2015. It has so far failed to deliver any great results. So I would like to avoid that. I think I would like to see the results actually coming out and then maybe buy, even if you have to buy at a higher rate. But as of now, the past track record of Ujjivan has been very disappointing. So I would like to wait some more time before suggesting anyone to buy.
This one is coming from Dhananjay. This one is also for you, Ashish. He wants to know whether it's good time to accumulate Aavas financiers for the long term, and his long term is around 3 to 5 years. But I believe we've already taken that query. Let me go to the next one. This one is from Harshit for Vijayawada. 80 shares of Federal Bank. He's saying that he cannot see any growth in this one, but he wants to know whether he should hold it for the long term. His buy price is 127.29, around the current market price. What I'm not sure whether he means growth in the stock price or he meant the company's financials, but Ashish, what's your take on Federal Bank?
Yeah, Federal Bank has been doing quite well. In fact, last few years it has delivered fairly good returns, and I don't see anything changing. I think there's still a lot of scope for growth for the private sector banks, well-managed private sector banks, and Federal Bank is one of them. Certainly, hold on. I think there's plenty of scope on the upside. Hold on for the long run. You will make a lot of money here.
Kunal, Venkat Rao from Vishakhapatnam wants to know your view on GMM Pfaudler and RVNL. Is it a good time to enter both these stocks at the current price?
RVNL, yes, I think even though the stock is into a corrective phase, it had an exponential up move over the last 3-4 months. I would still believe that it's a good candidate of a buy on dips. I think closer to 120-25 could be a good starting range for RVNL. But again, keep a trigger where maybe a 15% drop could be another point where you can look to average further. So don't look to accumulate your entire quantity at current levels. GMM Pfaudler I would avoid at current zone because the stock is still struggling. It's at a multi-week low. The previous highs for GM Pfaudler, I think in 2022 end was I think at 2100, 150 mark, and from there the stock has gone through a sharp correction. So still looks like a chart which is struggling, which is to avoid.
All right, then on that note, we'll actually slip into a break in this edition of Buy Now, Sell Now. When we come back, we'll continue taking all of the stock related queries. Also, the most awaited rapid fire will also happen after the break. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's continue with your queries. This one is coming in from Pankaj, and Pankaj has asked about Tata Motors DVR, about 673 shares at a price of around 194 odd rupees. Wants to know whether to book profits or continue to stay put with this particular holding. He can stay put for the next 5 years. Ashish, what's your take? Do you think it makes sense to stay put with this one or book profits?
Well, usually Tata Motors, if you look at the history, has been a stock where you have got trading opportunities, and whenever you are making money, it has been better to book profits. However, I really think that this time is different because, firstly, they have never had such a good traction coming in the domestic domestic car, passenger car, as well as the SUV market, the way they have it right now. And along with the commercial vehicle space in which they have a strong presence, and the global car market space, which also is seeing improvement. So I think it's never been so good for Tata Motors as it is now. So I would like to give them the benefit of doubt and say that this time they will actually break out and continue to deliver value going forward. Also, the electric vehicle space is a great opportunity which they have managed to move in quite early. So I think Tata Motors, DVR and Tata Motors both, you should hold on this time. I think there is plenty of more room on the upside.
Kunal, Hemant is holding 10 shares of APL Apollo Tubes at 1,074 rupees per share. They want to know for the short term, could they expect a run-up of around 5 to 10% in the very short term?
Swing charts are quite okay for APL Apollo. From 1100 to 1160, the stock has recovered in last, I think, 3 or 4 days. Current patterns also indicate that possibly there could be a movement of another 40 rupees on the upside for EPL Apollo. So I think closer to 1200, 1205 is where I believe that the indicators can go into an overbought territory. So possibly yes, another 4% to 5% up move in the near term could be seen for EPL Apollo.
Okay, this one is coming from Anjali Khurana, who is a senior citizen, and Anjali sold Chennai Petro very recently, Kunal. She's looking to re-enter this particular counter, wants to know what sort of a level should she look at?
So I would probably categorize that a 10% correction from a previous swing high is a good enough level where you can look to start adding or accumulating. So that could be closer to 360 mark for Chennai Petro. But it all depends on the propensity of or the possibility of upside for the stock. Because when a stock is going into a very strong uptrend, it generally doesn't go into sharp phases of correction. So a 5%, 7% correction could be good enough zone where you may look to see the stock settling into as a phase of corrective. So I think it's at a similar phase of correction as of now. You can start buying at current levels, keep some powder dry for another 360 levels for Chennai Petro. I think those could be good enough points where you can look to rebuy.
Ashish, Dr. Shyam from Nashik has Jindal Worldwide 550 shares at 370 rupees. What should they be doing with this right now?
Sorry, but I haven't tracked this stock lately, so I would let it pass.
Kunal, you have any view on this one, Jindal Worldwide?
I think trading at 330 levels, I would suggest to avoid the stock. I mean, if you've already bought, then I think it's a good time where you can look to exit the stock because it's a low liquid name. No major trends emerging for Jindal Worldwide. The stock has struggled from 370 to now 350 or sub 350 levels where it's trading. So I would suggest to avoid or exit.
Okay, this one is coming in from Anand from Gurgaon and looking to invest in two stocks as DLF and Global Health as Medanta with an allocation of about 50,000 rupees each for a period of 1 to 2 years. What do the charts look like is what he's asking, Kunal. Medanta, I know it's a recently listed counter, but in case if you can give some insights on whether these two names really stand out, make sense to invest?
The second one was?
One is DLF, one is Medanta, that is Global Health.
So yeah, DLF, I think I have voiced my opinions, I think a month or back that the stock is looking extremely attractive. 470, 475 plus is where the stock is trading, in fact 490 where the stock is trading right now. So you can look to buy. Again, have a time frame which is not just 1 to 2 years. I would believe that a bigger potential could get unleashed for DLF possibly in the next 3 to 5 years. So if you have that kind of a time frame, then I think you should consider buying the stock at current levels. Even Medanta, so the chart patterns are a bit restricted, but the chart history is a bit restricted. But looking at the recent charts, the last 2 months of price history from 400 levels to 600, the stock has gone through a very subtle, slow, steady and a gradual uptrend. So I think that's also an indication that it's a stock which could probably prove its metal quite worth over the next 1 to 2 years. So you can consider buying both of these names. Just one tweak, DLF, don't consider this for the next 1 to 2 years, but possibly for the next 3 to 5 years.
Okay, keeping an eye out on those two stocks. But Srinivas Rao from Hyderabad, Ashish wants to know your view on Indico Remedies. How is it looking like? Would you advise to enter currently?
But I wouldn't advise to enter at the current price. I think within the pharma space there are better opportunities, and I think I would avoid it at the current time.
All right. This next one that I have is coming in from Preeti, writing to us from Mumbai. And out of Tata Motors, Sona Comstar and Jubilant Foodworks, which one do you recommend, Ashish, to buy afresh and continue to hold on to at least the next 3 years?
Well, I think Jubilant Food, because Tata Motors has moved up a fair bit in the recent past. Jubilant has seen a correction, has somewhat studied and moved up, started moving up, but I think it's still a very far away from its high peak, which was I think over about at least 30-40% higher from here. So I see no reason, because I think QSR market will do very well going forward here. And Jubilant is very well placed. So I think this rough patch where their earnings have kind of stagnated will get over soon. So Jubilant Foodwork is what you should be buying from here.
Okay, let's move on. And Kunal, we have Mathi, who has bought Axis Bank at 940 rupees. The swing high is rupees 960 is what they're highlighting. Should they exit near those 960 levels or wait? What is the target that one should keep now?
See, it depends. If you've bought in FNO, then I think 960 could be a zone where you can look to book profits. Because over the next couple of days, there's also the RBI policy event that could probably trigger some sort of a cool off or a volatility which may come back into the banking index. But then if you are in from a medium term kind of a play, then I think a very strong possibility that Axis Bank can break past about the 1000 mark. This wave of price uptrend has been very slow, steady and gradual for Axis Bank, breaking past about 880 levels, 900 and now about the 930 mark. So I think I would suggest to hold on to Axis Bank if you're a medium-term investor, but if you're a short-term trader, then I think 960 could be a good zone where you may look to book out full profits.
All right, this one is coming, one more coming your way actually, Kunal. This one is from Rajendra writing to us from Bangalore. He's saying he had purchased Vedanta at a price of around 293 rupees per share. He wants to know whether he can continue to hold on to this one for the shorter term, or if you are suggesting that he looks to exit Vedanta, then he wants to know which other share should he look to buy.
I would suggest to exit Vedanta. I'm not sure whether it's the price which you bought as the ex-dividend or if the dividend is factored in. But I think you can consider exiting the stock at current levels because the entire metal sector seems to be struggling. A better alternative, which I flagged off at the start of the show, is Sun Pharma, trading at 1015 or 1010 levels. So it looks very attractive for a big breakout. I would probably expect the stock to move up towards 1050, 1000, maybe 1100 plus in this wave of uptrend for Sun Pharma.
Okay, Ashish, we have Padma who's holding BEL at 96 rupees and Cochin Shipyard at 475 rupees. Should they continue to hold or sell?
BEL certainly continue to hold. I think defense story is just about starting, and I think BEL is the clear favorite when it comes to defense plays. Already very well established, doing well, government backed. So a lot of good orders coming in. Order inflow likely to improve going forward. So BEL is certainly a hold. Cochin Shipyard I haven't tracked lately, so I would like to avoid that. But BEL is certainly a very good stock. Not only to hold, you can even buy more.
This one is coming from Gopinath R, writing to us from Mysore, and he wants to know which bank should he look to invest in, HDFC, ICICI or SBI, and also makes sense to look at HUL for an investment today. The fact that he's used the word investment, I would assume that it's a long-term investment idea. What's your take, Ashish? Amongst the bank, HDFC Bank, ICICI and SBI, which one do you think, I beg your pardon, HDFC, ICICI and SBI, which one looks good? Also, whether should look at HUL as an investment?
Well, regarding banks, I think between the three of them, I think the one looking best is HDFC Bank for investing because it has kind of underperformed over the last 2-3 years because of the merger which is taking place with HDFC. There is a lot of confusion and there's been a lot of some uncertainty. But I think although ICICI itself is doing very well, the turnaround will continue. But ICICI stock has moved up a fair bit, and SBI, again being the public sector bank, has moved up. But I wouldn't be so confident from here. The one which I will very confident will be HDFC Bank. I think if you buy now, I think somewhere the underperformance will catch up, and I think once also the merger takes place with HDFC, it becomes a huge conglomerate and it will do very well because it will be a clear leadership position in the private sector banking as well as the housing finance, both of which are going to see a very good traction going forward. So HDFC Bank, no doubt about it, would be the best bet in this. And regarding HUL, yes, I think HUL, look, nothing very exciting will happen. It's already a very well-capitalized stock, but in the very recent past, it has done nothing. In fact, last 2 years, almost it's been a kind of a range bound in HUL. So we'll do well from here. I mean, if you're looking at not very handsome returns, but maybe something like anything around 12 to 15% kind of a return, steady return over a period of time, I think HUL is the stock which you can buy and hold. No major trigger right now, but I think we will continue to do well. So you will make a decent return over a period of time.
Okay. Keeping an eye out on that. On that note, let's get started then with the rapid fire round. And Kunal, the first one coming your way, Granules and BLS International for the short term, is it looking attractive? That's the query from Sanjay.
Granules, yes. BLS International, I would suggest to avoid at current levels.
Okay, Rakesh Gupta wants to know at what level should he look to re-enter Nestle? He's already sold the shares. Kunal?
So, assuming the stock corrects back towards 21,500, that's a good zone where you may look to rebuy if it's a short-term trade.
Ashish, the viewer has Elcon Engineering at an average price of 440 rupees. Could they expect an up move now here?
Yeah, I think so. I think hold on.
Okay, Kunal Krishna Kumar has 350 shares of Pfizer, 4,395 rupees per share. Average sell or book losses?
Hold on.
Kunal, we have a query from Balan, and they are holding 20 shares of Microns at 82 rupees and Anantraj at 110 rupees. What should they do? Continue to hold or shift to something like a Bank Nifty?
Hold on to both of these names.
Okay, outlook for Talbros Engineering. He's already purchased at 277 rupees per share. Subramanian from Chennai. Beg your pardon. Ashish, what's your take?
I haven't tracked it, so I'll let it.
Okay.
Okay. Kunal, the next query is from Sam from Goa, and they want to know what is the upside that you can see coming in for L&T Finance Holdings for the short term. They've bought it at 102 rupees.
108 is the short-term target which you can keep an eye on.
Okay, Swati has given me a lot of stocks to ask you, Kunal, but let me take a few of them. For 1 year time frame between Astra Micro, Bharat Dynamics, Birla Soft, which one would you advise?
Tough one, Astra Micro and Birla Soft.
Ashish, we have Kabir who is holding Premier Explosives at 409 levels. What should they do from the medium term outlook?
I think continue to hold on. It should do well going forward.
Okay, Kunal, you spoke about Arvind right at the start of the show. 95 shares, Anant Nayak has it at 92 rupees per share. Sell or hold?
Hold and look out for targets of 150 plus.
Ashish, if you had to suggest a couple of names overall, just which would do well in the next 2 to 3 years in any sector, what would be the query coming in from Money?
Well, I think if you have to buy a stock at these levels, I think we mentioned about HDFC Bank, Reliance Industries, DLF. These are some of the stocks which you can look at, and also maybe Cipla.
Right. All right. And with that, we come to the end of the rapid fire as well as this edition of Buy Now, Sell Now. Thank you so much, Kunal, as well as Ashish, and viewers. It's a goodbye from Winnie, myself, and the team that put the show together. Stay tuned. Markets at Noon coming up next.